Welcome back to another video, guys. My name is Alexander. For those that don't know me, I'm a 21-year-old day trader, and today I'm going to be pretty much making a video to explain to you guys why inversion gaps are so damn important in the market. Like, especially if you want to trade ICT and you want to be a successful day trader, inversion gaps are extremely important to know in the market. Reasoning. I've never used that term in my life, but anyways, reason for that is because inversion gaps can tell you where to enter the market, where to put your stop loss, and also gives you a very strong indication of where the chart is going to move. Say we're going in an uptrend and maybe you want to try to catch the reversal to a downtrend, inversion gap, you can use that for that. So if you don't understand, I'm gonna show you a little example in the chart right now. So give me a second, let me explain to you. So if you did watch my last video, this might look a little familiar, but as you can see, we have our body and our wick. So when we have a gap in between right here, we'd want to draw out and mark this as a inversion fair value gap. So it's like a fair value gap, but it's inverted. So instead of it coming up to here and bouncing downwards, we're actually gonna full close body right through it. And then we can come down, maybe retest and continue our uptrend. So say we're coming from a downtrend right down here, we come up and instead of rejecting right away, we actually push right through a full body close right through. And I'm not just talking about a wick close. I'm talking about full body, like full body candle close. Once we see that, then we can see that we're actually going to be switching from a downtrend to an uptrend, and we can start a new trend upwards and maybe enter our position right at the break of this inversion gap. So again, still a little confused. Don't worry, I'm going to show you a real life example in the charts. So an example right here, I actually took this trade today. Obviously, there's more conviction than just the inversion fair value gap. But for the purpose of this video, I'm going to be explaining the reason why I entered the trade. So right here, we see that we have these three candles. The wick ended right here on this candle. The wick ended right here on this candle, which gave us a gap right in the middle. So now we would draw our little inversion fair value gap, and we can see that we're coming from a downtrend. The second we actually close this candle, we draw it out, and now we come back into the zone, and instead of a fair value gap again, instead of rejecting down, we actually broke very strong right through this inversion fair value gap, making a close right at the top. And as you can see right here, I took my entry. And if you guys do ask me in the comments why I got out of this trade so early, it's because I saw these equal highs and I just didn't want to risk this tanking down and actually continuing. And just to give you a little other quick example, we have a inversion fair value gap right here once again, close down, full breakthrough, continue our uptrend. So anyways, guys, this is going to be the end of the video. I really hope you enjoyed the video. If you did, leave a like, subscribe, let me know in the comments what you want to see next, and I hope I made it as simple as possible to explain. And go back test and learn the strategy so you can use it in your setups.